Hi guys, it's Annika here with TipRanks, and today I want to talk about 5 green energy stocks for Q4 of 2021. Green energy companies with their provision of alternative energy including solar, wind and hydrogen are essential in replacing fossil fuels. While some renewable energy stocks have seen some impressive growth in the last year, with the urgent change needed for the environment, some other stocks could see some impressive gains as well. Now the question is, which stocks will that be? Which alternative energy will dominate? And how will this impact different stocks in the green energy sector? Well, in this video, we're going to cover 5 green energy stocks that TipRanks investors deem a buy. The first is Plug Power, and its ticker is PLUG. Plug Power designs, develops, and manufactures hydrogen fuel cell systems, and these are to replace conventional batteries in vehicles and equipment. The company's stock has increased by 150% in the last year. Now the question is, does it still have room to grow? Well, the current price is $41.33, and the analyst price target on Plug is $44, which is a 6.46% upside, but it is deemed a strong buy based on 15 Wall Street analyst ratings. They focus on zero-emission fuel cell products that are economically viable, sustainable power solutions that solve important business challenges in our economy today. This can enhance productivity while still reducing the impact on global warming. The different products that they have include ProGen, which are fuel cell engines. They have GenDrive for material handling applications. They have GenSure for backup power for both high power and low power stationary applications. And the main benefit to emphasize is that it provides zero-emission energy that can be used to power anything from commercial vehicles to data centers to drones. The smart score is currently 6 in that it is neutral in terms of outperforming the market. However, analyst ratings are a strong buy despite TipRanks investors being very negative. Blogger opinions are neutral and the news sentiment is bullish. Hedge fund activity, however, has decreased, while 2 added shares or opened a position on Plug. It's also worth noting that Plug Power regularly gets media coverage in financial news, which is why the news sentiment is bullish. Technicals have been negative and return on equity has also been negative at minus 28.02%. We did see a share price rally in the beginning of the year, and perhaps because of the negative technicals, we saw a slump. However, when it comes to green energy stocks, you have to focus on what their potential is in the future. How are they going to be mass adopted, and how are they going to solve the issue when it comes to global warming and the problems we have when it comes to fossil fuel emissions? That's how I personally like to look at green stocks and what their future potential is, and therefore what their future share price is. The second green energy stock is Sunrun, and its ticker is RUN. Sunrun provides residential solar panels and home batteries. The current price for Sunrun is $58.21, and the analyst price target is $72.12, which is a 23.90% upside based on 9 Wall Street analyst ratings offering 12-month price targets, and it is also deemed a strong buy. Sunrun have a strong focus on tailor-made solar panel initiatives for residential homeowners. They customize their system based on size, battery details, solar cost, energy usage, and also you can learn about incentives in your state. They have different solar plans and services, and they also provide solar education. Over the past year, the stock has seen a 6.5% rise, somewhat less than other clean energy stocks. However, there are some positive indicators looking ahead. First of all, it's the fact that it's deemed a strong buy. Although the smart score is neutral at a 6 in that it is neutral when it comes to outperforming the market, blogger opinions are bullish and news sentiment has also been bullish. Hedge fund activity has also increased in the last reported quarter, with 6 hedge funds adding stocks or open positions in Run, while only 1 of them sold. Technicals, however, are negative, as well as TipRanks investors that are also negative, and the return on equity has been negative 5.59%. But the 24.02% upside is still deemed positive for the Sunrun stock. The third green energy stock is Enphase Energy, and its ticker is ENPH. Enphase designs and manufactures solar home energy software and solutions. Like Sunrun, they tend to focus on the residential sector, mainly for people's homes. and they focus on homeowners being able to find the right solar power system for their home, and they also provide a personalized quote and a certified ENPH installer. The current price for ENPH Energy is $234.10, and the analyst price target is $220.54. Now, although this is a downside of minus 5.79%, it is still deemed a strong buy. Many times this is because of the long-term potential of the stock. Perhaps this could be a great dip and therefore an entry point for investors to get involved. But of course, this is not financial advice. Despite the downside, ENPH has a smart score of 8 in that it is expected to outperform the market. Analyst ratings have also deemed it to be a strong buy, and blogger opinions are bullish as well as news sentiment. Hedge fund activity, however, has decreased, with some that have reduced or sold out of their ENPH positions in the last reported quarter, while 3 hedge funds opened and added positions. Meanwhile, the company's corporate insiders have been selling the stock in recent months. In fact, 3 corporate insiders have made informative sell transactions over the past 6 months to the tune of around $20 million. But despite this, technicals have been positive with 144.19% momentum, and return on equity is 31.17%. Recently, the share price saw an increase in its price. This is perhaps why we are seeing a potential downside, because the share may correct itself. However, it is still deemed a strong buy, perhaps because of its long-term potential. The fourth green energy stock is Solar Edge, and its ticker is SEDG. And like its name implies, Solar Edge focuses on solar energy. Solar Edge provides solar energy for homeowners, business owners, and they also provide grid services. They have a diversified product range for their different clientele. They also provide Solar Edge training in different locations so that people can learn to optimize their businesses. They have different options for homeowners, business owners, as well as different grid services. The current price for Solar Edge Technologies is $355.13. The analyst price target is $321.67, which is actually a 9.42% downside based on 18 Wall Street analyst ratings. But despite this, they still deem it to be a moderate buy, with 13 analysts deeming it to be a buy, 3 a hold, and 2 a sell. The stock went up over 30% in the past 12 months. Despite the fact that analysts are saying buy despite the price target showing a 10% downside, it's not analysts who are showing mixed signals. Looking at the company's corporate insiders, 2 have actually made informative transactions in the past 5 months. Director Moore Avery sold $6 million worth of shares, while Rachel Price, a VP in the company, has bought $150,000 worth of shares with her own cash. In fact, famous hedge fund managers such as Cathie Wood of Ark Invest Management reported a 13.67% increase in ownership of Solar Edge shares. Ray Dalio and 4 other hedge fund managers also opened positions and increased their holdings in Solar Edge, while 2 managers reduced or sold out. The SMART score, however, is incredibly high. It is deemed a 9, which is that it is expected to majorly outperform the market. The analyst ratings have also deemed it to be a moderate buy, with blogger opinions and news sentiment both being bullish. Technicals have also been positive, and with a return on equity of 12.99%. The fifth green energy stock is called Ormat Technologies, and its ticker is ORA. Ormat supplies alternative and renewable geothermal energy technology. The company has built over 190 power plants and installed over 3,200 megawatts of power. They have a lot of experience in the industry, with 56 years of experience, and their total market cap is $3.25 billion. And they have around 1,400 employees and around 1.1 gigawatts portfolio. They are a leading renewable energy provider in geothermal, recovered energy, and energy storage. The current price for Ormat Technologies is $73.51, and the analyst price target on Ormat is $82. This is an 11.55% upside based on 2 Wall Street analyst ratings offering 12-month price targets. It is also deemed a moderate buy. The SMART score is a 5 in that it is neutral when it comes to outperforming the market. Blogger opinions are bullish and news sentiment is neutral, despite TipRanks investors being very negative. The company's insiders reported an informative transaction to the SEC, so it is difficult to judge their sentiment. Looking at hedge fund activity, 3 managers added or matched to their portfolios, while 1 reduced its holdings in the most recent reported quarter. Technicals, however, have been negative, and return on equity asset growth has been 3.97%. The share price increased significantly at the end of 2020, beginning 2021. Since then, we can see the share has dropped in value, and this could mean that it is highly undervalued and a potential entry point for investors. Again, that is not financial advice. So those are my top 5 picks for green energy stocks for Q4 of 2021. Let me know what you guys think. Leave your thoughts in the comments below. And if you made it this far, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. I look forward to seeing you guys in the next video. Bye!